Welcome everyone to the May edition of Around the Markets. My name is Mark, and today we'll begin with an in-depth study about the performance of the S&P 500 and the Nasdaq 100. Later, we'll pivot our focus to the European landscape, representing a comprehensive chart about the European indices. So yeah, let's kick off with that study about the performance of the SP 500 and the Nasdaq 100. So last time I talked about that orange line that did not really please me because yeah, the Nasdaq 100 was the leading index, and we saw that late March, beginning April, that yeah, the Nasdaq 100 wasn't performing well, wasn't making new highs, and the S&P 500, for example, did that. And I thought, yeah, that was little bit of a weak sign for yeah the market in general. And in the month of April, we saw a little pullback, and yeah, maybe someone did bought some short ETFs to yeah hedge their positions. So that was a really good idea. So if we focus now to the S&P 500, so we'll grab the next chart. So we discussed then that in the end of April that the index was still above his 50 days moving average, but in April we saw uh, it did cross that 50-day moving average, and we see that the price is still below that 50-day moving average. I will do a little zoom on the charts. So we saw it now it's more clear. We did test that 50 days, it's hold, but now, yeah, the price is fallen below that 50-day moving average. So it's really important that, yeah, the SP 500 yeah, gain back that the position above that 50 days moving average. We saw it broke also but below that first little support zone, but that second support zone, I will extend it a little bit, just till here. That support zone from 4,950, that helped very well and did support the price. So yeah, it's now very important that SP 500 stays above that level. So we can see now that the price is yeah a little bit meandering between that two zones, the 4,950 and the 5,180 zone. Maybe we've seen now a little an A wave. Maybe we're seeing now a B wave, and we could see maybe possible again a C wave to the bottom. So if this we have a target around that 4,800, and if I do yeah zoom out again, that 4,800 is also the top of yeah end 2021. And also we see here, if I zoom back again, I will extend also that big support zone that we may not cross. If we cross below that zone, that is really, really bad because we have here three things. First, we can say we have some sort of an Elliott wave and ABC correction that point to that 4,800. Second, we have an horizontal pivot, what was the previous all-time high, around the 4,750. And we see that the 200 moving average is still moving upwards, but it's also close to that 4,750. So we have three different kinds of technical analysis, and so we are creating some sort of cluster around that number. So yeah, that number 4,750 is really, really important. And for me, the S&P 500 may not close several days below that zone. So maybe now we still see some weakness in the SP 500. So I think if the SP 500 remains below the 5180, for me the sentiment is a little bit negative. If it was below the 4750, yeah, it becomes really bad, I think. And if it stays several days below that zone, that is really not good. If we look to the Nasdaq 100, yeah, we almost see the same image, except there, yeah, the 50 days moving average is already moving a little bit downwards. So yeah, we need to see what happens. But I must say I'm not really negative, because when I look to the next study, here we see on the left side Nvidia. Nvidia, we can say, is the leading factor, the leading company in the Nasdaq 100, and also the leading company. We could almost say for the markets for, yeah, more than 1 year. On the right side, we see the SPY, the SP 500, the SPY ETF. So when I click on expand legends, we see that Nvidia almost rise about 200% from the low, and the SPY rise about 24%. The correction in Nvidia was about 50%, we see, from the highest point. And for the SP 500, this is 5%. So what we see here is totally normal. A company that is rising more than 200%, yeah, it's obvious that the correction for Nvidia is almost double, triple the amount when the correction in the SPY index. But what plays me a little bit is when we look at this SPY, and I will activate the crosshair. We see here the low, and the low is on almost on the same period as here. So we see here that it's February on the same high of, yeah, beginning of February. So we'll add here a little bit of support zone like this. So when I use the same support zone here and I look which date we are, yeah, I see here normally if the movement of Nvidia is, yeah, about the same, moves the same as the SPY, normally we should say that the Nvidia should have tested the zone around the 650. Nvidia didn't. It tested a higher level, 750. So we could still say that Nvidia is still leading, for the moment, is still leading the markets. That's the reason why I'm still a little bit positive about the markets. Presume that if Nvidia was falling below that zone and maybe tested the 550, for instance, if this was the case, yeah, my voice was totally different. I would say that was really negative. But for now, I could say yes. Maybe we see a correction in the SPY. So I told you that the 4,750 for the SP 500, that means that the SPY could correct to 475. If Nvidia remains, yeah, above the 650, even 550, 500, that's still, yeah, I could say that's still okay. So for now, if Nvidia isn't making a new low, um, that's okay for me. So I will click here on cancel, and I will grab the next chart, and we're gonna discuss a little bit about the gold. So here we saw that the gold price is still moving higher. Also here we have a little bit of a correction in the gold price. I will zoom that chart in. And I think that it's, yeah, it's really important for the gold price that it to remain above this zone. It's about the 2,220. We also see the 50 days moving average is about the same height, so around the same level. So also here we have yeah, two different studies in the technical analysis. So we have a little bit of a cluster around that zone, the 2,220. So yeah, also there the gold price need to stay above. What pleased me here is what we say for the gold. Gold, yeah, is maybe now we're still seeing now a moving uptrend. Um, it's important that, yeah, if there's really an uptrend in gold and in the gold miners, silver miners, we always say it's important that the mines are leading the gold price. And for several weeks, months in the past, that wasn't the case. The gold price was a lot better performing than the miners. But if I take the same study here and I change instead of NVIDIA, I will add the GDX ETF on the left side. And on the right side, I will add the gold price, the future gold price. I will erase all the different items on the chart. One moment. So yeah, I'm gonna deactivate the legends. So like this. The bow charts, I will change the periods and I will change to 6 months. So like this. What are we seeing? So yeah, here is the low for the gold miners. That corresponds avec the low over there. And we see that the gold price is a little bit making a new low. And yeah, for the gold miners, for the moment, it's holding its levels. So really, I'm talking short time. That is really positive. I hope that the gold miners are still moving upwards and is really pushing the gold price up. I think that it's really important for if we're gonna if we wanna see a really a bull trend in the gold miners and the silver miners. So last, I will discuss something in the Europe landscape. I will click on the last study. And on the left side, you see the performance of some key indices of Europe. On the left side, you see the performance of the key indices on 2 years, and on the right side, you see the performance on 1 month. And what you notice is that, the weak indices like the Belgium index, England, and Norway for the last 2 years, they remain, even Belgium was negative for the last 2 years. UK was about 10% higher. Norway was about 15% higher. But all the other indices were 25 to more than 40% better performing over a period of 2 years, except Switzerland. If we have a look on the right side, we see there that Switzerland remains a little bit remains weak. But we notice that Norway, UK, and Belgium on 1 month are now the better performing indices. So if the indices will continue to go higher, maybe we see a little correction in May. But I think it's important that you do your due diligence, look into these markets and look which shares, which companies are pushing those indices higher. So if we're gonna move higher, it's important to have the right the strong actions in your portfolio. And we still see that Poland was the best one, almost the best one over a period of 2 years. And we see that Poland remains good. So I think if you want to choose some actions short time, maybe longer time, but short time is for sure. Really look at Norway, the UK, Poland, and Belgium. Okay, this for the May edition of Around the Market. I wish you all the best, and I will see you next time. Bye.